Now lagging the major averages while the Nasdaq outperforms. We're up, of course, led by tech, as you might expect, and consumer discretionary, and anything positive for the S&P and Nasdaq will be a record, which we will indeed get. And Mike, I guess starting to look a little bit stretched to the upside, or still not?
I would say the Nasdaq specifically, or maybe even the Nasdaq 100. Yes, you're starting to see things like, really just the short-term extension of this trend has maybe pushed that envelope just slightly. But it's one of those things where along the way, on the way higher, 20% or so this year, you've had multiple periods where it's gotten there. And I don't necessarily think that it's been easy to say, therefore, it's kind of game over. Finally, we're going to have one of these broad pullbacks. But you do have to be aware. I think if you look at some of the big Nasdaq stocks, it seems just a little bit chasey today. Some of these big names up 2 and 3%, not really in any news at the end of a month. We're already riding better than a 3% gain in the S&P 500.
Jason, what do you make of these gains that we continue to log day in and day out? Morgan Stanley's Mike Wilson says a 10% correction is all but inevitable. Do you agree?
Yeah. So what I would say is, a lot of focus on last week was Jackson Hole and the Fed commentary, and the focus on really the two mandates, which is the inflationary mandate and the labor mandate. And it looks like obviously we've hit the inflationary mandate, but labor is still in focus. So I'm really tuned into what the labor numbers look like on Jobs Friday, this Friday. And also I'm really interested to see what these labor input costs look like midweek. So that's really where I'm focused. But I do think the market can move higher, more liquidity and lower rates is a risk on bet. So that's kind of where my thoughts are here.